Okay, thanks for joining us today for our QuickBooks Online tutorials. We are continuing our discussion about entering beginning balances into QuickBooks Online. We have discussed inventory before, OpenAR, OpenAP. We're talking about uncleared transactions and hopefully get to trial balance. There will definitely be a little trial balance in there. So what are uncleared transactions? Uncleared transactions are when you have a check, perhaps, that you wrote and dated in a previous period, but is clearing the account now, okay? So when you move over beginning balances, you need to make sure that you have that check in the system so that when you go do the reconciliation this month, or your first reconciliation of the month, you can check off that check. You can't just have this big lump sum trial balance in there. That isn't going to work. So you have to be able to check off that check. So that's what we're going to be talking about today. I'm Marjorie, CEO of Fourlane. I'm going to be leading us through all the things. Just a reminder about what Fourlane does over here. So we focus on getting you data to make decisions in your business. I know a lot of times people say, well, my CPA says I don't need to do this. Well, we are here to tell you you should be running your business so you can make decisions every day, not just based on doing taxes quarterly, annually, right? So we want to make sure you have the right decisions. And that means structuring your software appropriately. So that's what we do. Okay, so we talked about accounts receivable, as I mentioned before, accounts payable, inventory, and now we're going to be headed into uncleared checks. And I'm going to dive in product over here. So I have my QuickBooks Online sample file, so you can follow along. Just search right in Google for QuickBooks Online test drive or sample company file, and then you can get into this. I always choose the QuickBooks Online Advanced file because that means I have access to all the features in case I need them when I'm going through things. So what we're talking about today is I'm going to go in and actually set up a new account in our chart of accounts. Generally, when we're doing unclear transactions, we're talking about bank transactions, and we're talking about credit card transactions. Maybe we have an other current liability for a note payable. Maybe we have a other current asset for some kind of other receivable. But it's things that have a statement, right? So things that we're going to have a statement for, because when they're things that we reconcile. Now, we've talked about before how when you reconcile other accounts, like prepaid expenses, as an example, you reconcile to zero because you don't have a statement. These are things that have a statement. Your checking account, you have a statement, right? So I'm going to go ahead and create a new account so that we're starting kind of from fresh, and it's going to be a new bank account. So we're going to save it under bank accounts, and it's just going to go under checking for here, and it's going to be the Fourlane bank account. We are not a bank, by the way. And then I'm just going to say save. So I have this new account in the system, okay? Now, how do we get the opening dollars in this account? Usually, we are putting in our trial balance information, right? So we're saying as of June 30th, we're cutting over to our new file, we're starting our new file, and we are going to move over the balance from our old file or from our old system or whatever it is into our new file, okay? So that does not necessarily mean, as we should know, right? It's very infrequent that our checking account balance in our QuickBooks file is going to exactly match our checking account balance in our bank. Why is that? Because we have checks. I wrote a check. In my QuickBooks file, it reflects that the money's gone already, right? Because I need to understand what cash I have sent out the door. But in the bank account, maybe my client hasn't cashed that check yet, or my vendor hasn't cashed that check yet, so it's not showing coming out of my bank account on my statement yet, okay? So those two rarely actually tie out. They rarely actually tie out, exactly. So I created my Fourlane bank account, And so when we put in the beginning balance, so I'm going to go ahead and view the register here. When I come in to put in my beginning balance, I can put it in as a deposit, right? Most of the time we're entering journal entries because we're entering several. But for now, I'm just going to enter a journal entry just for the bank account, right? Normally when we're putting in trial balances, we're putting in the entire thing. So we're going to add to the Fourlane bank account. We're going to say we had $58,235.12 in the bank account, and this is my opening balance. And I want to date it 6/30 also. I forgot that side. On this side of things, now normally, just like with everything else, normally when we are setting up opening bank accounts, we also do a bank account clearing, okay? And that is because we want to have a account in here that we can see the details of what doesn't balance for some reason, right? So if we go in and we put in the opening balance, and then we enter all uncleared transactions, and then we zero that out, we want to make sure it does zero out and that it doesn't, we don't have anything kind of like lost missing somewhere. So I'll show you what that all looks like. So we usually put it to a bank account clearing similar to all the other clearing accounts we've talked about in our other sessions. Then once everything is done, right, it should zero out, or if it doesn't, we may have to choose to push it out to expenses or something like that. So let's talk about debits and credits a little bit so that you guys can see what I mean. So I'm going to create an Excel spreadsheet. Let's do those debits and credits. I'm going to create a new Excel spreadsheet, just a blank workbook here, and talk you through the debits and credits of what we are about to see. So cash, we have cash. This is the trial balance import, okay, and I'm going to debit and credit, right? Show our debits and credits in here. Now I'm going to go ahead and make these, let me make this a little bit bigger, make these dollars because we are accounting, right, and we like dollars. So we have cash for the trial balance import, debits and credits. So we just debited cash. I'm just going to say $50,000 for nice round numbers in here. And then we're going to go ahead and we're going to credit our uncleared or our clearing account, right? And this is what we do on the trial balance import. Okay, next, what we're going to do is we're going to go in and put in the uncleared transactions that are outstanding, okay? So I'm going to go into cash, and I'm going to have a deposit that hasn't been cleared, okay? So I have a $500 deposit that has not cleared the bank account yet for some reason. My offset to this is going to be the clearing account, okay? And then in the next one, we have down here, we have a check, right? And this is an open check still, undeposited check. This time it's going to be the opposite. It's going to be a credit. So I'll do 800. So we have a little bit of a difference. And the offset is the clearing account for 800, okay? Now you do have the option in here, you do have the option of going through and saying, I want to put in all my cash transactions individually, the 500, the 800, and then I want to net to the clearing account, right? The 800 minus the 500, you can net the difference. Or if it's a few transactions, then you can put it in detail like this. Okay. Now I just realized I messed up on the trial import side. When we do trial balance import, we don't put anything to clearing, right? We put in the cash amount and then put in all the cash, you put in all the accounts receivable, you put in all the accounts payable, you put in all the inventory balance, the inventory, accounts payable, accounts receivable, all do hit a clearing account. But then the net of it all hits retained earnings, right? That's where everything ends up. So this is actually hitting retained earnings here, so I have to go fix that. Okay, because that's saying when we set up our balance sheet, it is taking care of all of history, and all of history, when it balances, the offset hits our retained earnings account, which is how much, or hits owner's equity or whatever we have in the equity section. Okay. So in here, with these accounts, what I would do is I would do a sum, and I see what the you know, we've got 1,300 here and we've got 1,300 here. So those two net out okay. Okay. Then what we would want to do is in order for, so we're putting in cash and we're putting in this check. And the difference, right, we had 500 deposit to the positive. We had 300 difference to the negative. So the net of those two together, right, is a $300 credit. So right now, if I put these into my checking account, right, the checking account, the Fourlane account, it'd be 500 plus, 800 minus, and so it'd be end up with a balance of 800 credits. Okay. Now in the clearing account, it would be the opposite. I have 800 debit, 500 credit, so I would have a balance of 300 debit sitting in the clearing account. Okay. Now, we always want to clear the clearing account at the end of the day. And when I put these transactions in, it's going to affect my trial balance. And I need my trial balance to be $50,000 because that's what it was, right? So how are we going to do that? What we do is down below is we offset to our retained, our bank account, right? So our bank account to close out clearing is going to be a $300 credit. So this is to the clearing account. And then back to my Fourlane bank account, again, to close out clearing is going to be a $300 credit. Okay? And that's because I need to get back to the $50,000. That's what I need my trial balance to show. But I want to be able to put in each of the individual transactions so that I have them to reconcile against. Okay, so now we did some of the debits and credits. Let's dive in and actually do this in product. Okay, so again, this bank account clearing, this should have gone to retained earnings. Okay, so save. Okay. Now, what we're going to do is we're going to go in and we're going to put in the actual checks and the deposits that are open. Okay, so this is 630 opening balance. Now I'm going to go in and put in our check. The check is going to go out of the Fourlane bank account. It is normal practice to use the actual check date, right? And not just use 630 for this. And that's because, like, let's say the check is from, you know, December of 2021. At some point, you're going to want to write that check off. And by dating it into the future at 630, you may take longer to write that check off. Okay, so you should use the actual check date in here. Now, this is all going to be balance sheet type of transactions, so it shouldn't affect. But if you are doing balance sheet, trial balance month over month importing for history, then you do need to take a look at this and do a month over month zero out of the clearing account as well. Okay, so 5/12/2023, I'm going to come down here and put in my clearing, bank account clearing. The check, you can put in the check number again. It should be the check number because when you see it clear, you want it to show clearing, right? Then down below here in the check clearing amount, I'm going to put in. So this was the check. We said this was the $800 check, right? And then I can say save and close. Okay. So now notice when I put that $800 check in here, what happens is it changes my balance. But I need that balance to be $58,231.12 at the end of the month. So that's what we're going to try to get back to. Now I'm going to go ahead and put in my opening deposit. Now it's not normal, right? It's very weird to have deposits that don't clear. The only time that really happens, what we found is that happens when we have maybe like a credit card transaction that you have a couple days before it deposits into your bank, but you've received the credit card transaction. But usually, or maybe you have like a lockbox and they, accept payments throughout the week and then make one deposit for you at the end of the week, and you want to show them accepting payments at the appropriate times. But it's pretty abnormal to have bank deposits outstanding. That's not a normal thing. But in here, I'm going to put in bank deposit It's a Fourlane bank account. Again, I'm going to choose the right date, so it'll probably be closer towards the end of the month that this was dated. I'm going to say down below here, you can put in details, right? So receive from if you needed to. You can put in the account here to our clearing account again. And then maybe description, deposit from Joe's stuff. Okay, and then we put in the amount of $500. And we can go ahead and say save and close. All right, now we're back at our register here. You can see in the register that I am still off. I'm closer together, right? It's closer to my 5823, but I'm still off a little bit because we have these two transactions that net out to $300. Okay. Now, one of the easiest ways to see what I need to wash off in here, basically, is one of the easiest ways is I come in to my bank account clearing, and it shows me my balance of $300. Now, I know I need to get rid of this $300 balance. Okay. So in order to get rid of it, I can go back to my trusty journal entries and remove. So again, a payment, right? We have a $500 that it raised this, or it went out of this account, right? It raised up, this is a deposit. So it raised up my actual Fourlane bank account, my true bank account, but in this clearing account, it lowered because that's the offset. So in order for me to remove from here, I'm going to have to be crediting, right? Going back to our Excel spreadsheet, I'm going to have to be crediting the clearing account by $300 to get it to zero. Now, if you make the mistake and you do it the wrong way, then you just go back and you open up the journal entry and flip it, which I know we've all done several times. So I come in here to my journal entry, and I'm going to date this as of 6/30, and I'm going to put on here the account, right, is the bank account clearing. I'm going to credit it for $300 to offset uncleared checks. And then on this side, I go to Fourlane bank account, right? And then the offset is $300, and I say save. Okay. Now, when I come back into my bank account register for the bank account clearing, it is 0, which is what we want to see after we have appropriately put everything into our accounts, right? Our clearing account should always go down to 0. And when I flip over to my Fourlane bank account, look at that. We have $58,235 as our balance, and that's what we want to have shown and reflected based off of what our trial balance said. So we managed to get the details in here, right? Managed to get the details in here when we put in our opening balances, our uncleared check. Okay, so now let's talk about how to reconcile this account, right? Because we haven't reconciled this account yet. And so when we reconcile it for the very first time, what we want to have happen is sometimes when you start opening balances, you reconcile the offset account and you show that compared to a previous reconciliation. So if you have a previous reconciliation report, right, when we reconcile accounts, it shows us what our beginning balance should be. What our beginning balance should be, it should be the 58 and the 300, right? It should be those two things together. And then what should be left in here is this. So if I were reconciling as of 6/30, okay, and the beginning balance from my previous reconciliation, the 5/31 balance, right, ending balance, should be the 58,235 and the 300 together. That's what it should be. Okay, because that means that we did everything correctly. But what I'm going to, the other alternative, which we see a lot of people do too, is they go, okay, now I'm going to reconcile my first month's bank statement. Okay, so, and I'm going to do it as of July 31st instead of June 30th, because I reconciled June 30th in my old system. That one's reconciled. That one's done. So I can come in here and I can reconcile. Oh, my get started. Let's get reconciled. Woohoo. So the ending balance in this case, right, is going to be a little bit different for the very first time because it is not going to include all of the transactions that have been happening in the file over the last period, right? I don't have those set up in here right now. But this ending balance needs to be your statement ending balance, right? This has to be what the statement is. Now, I don't know what the statement is because I don't have a statement. I'm just making it up right now, right? So I'm going to say as of July 31st, this is what the reconciled amount is going to be. And I can say start reconciling. Okay. Now, all these pop-ups. I can't say don't show this message again because this is a sample file and it always pops up those messages. So the beginning balance at the start of this period, right, according to the bank statement, again, if we did everything correctly, should be the 58,535.12, okay, because it should be the trial balance information minus whatever outstanding transactions we have, or plus whatever outstanding transactions we have, is what the bank account should say. Okay, because if you look at a bank statement or like a reconciliation statement, it says, here's what your QuickBooks file said, right? Here's what was reconciled in your QuickBooks file for the month. Here are all the uncleared transactions, and here's your QuickBooks balance, right? And so we're doing it a little bit differently. We're saying, here's your QuickBooks balance. Here are the uncleared transactions, and we're backing into, right, this is the reconciled number. Okay? So this should be your beginning balance when you go to reconcile. If it's not, then we have to go back and figure out why. We have to go back in and figure out why. But this should be your beginning balance. So if I were reconciling this as of June 30th, right, that would be my balance. Now here I am reconciling as of July 31st, so I check off the offset to uncleared. That should start. I check off the opening balance because that should get me to my beginning balance number. And then I check off whatever cleared during that month. So let's say this deposit cleared, thankfully, because it should have cleared by now, right? For sure. And this check didn't clear. Okay. Now I'm backing into the number, so 59,035.12 is what I need to have. 59,035.12. Continue. Now I have a difference of 0. Okay. Now you should not back into that number. I just did it because I was using the system to tell me. Okay. So best practice is when you come into reconcile, after you put in the opening balances, after you've put in the unclear transaction, best practice is to reconcile June, click off the open balance here, click off the offset to unclear checks, and that should match your beginning balance going into, you know, how you're going to be functioning in QuickBooks going forward. Okay. All right, so that is uncleared transactions. So let's talk a little bit, let's move into trial balance a little bit. So trial balance is actually the easiest part to me. Trial balance is the most fun part for putting in anything. So when you think about trial balance, a trial balance is your balance sheet and your profit and loss. That's what a trial balance is. It's the two reports together. Okay. So when we're putting in our open balance, what we want to do is balance sheet is an as of time frame, right? So I'm going to put in my cash first, right? So we have our checking account. We have $800 or $8,000. We have our savings account, and I like to go line by line. I think it's easier to do it line by line, each account. We have 59,856.12. And then we have our Fourlane bank account, which we already handled, but I'm just going to pretend because I want to grab something. Okay. Then we have next is our accounts receivable. Now we mentioned in our other videos, when we enter our trial balance, you should be putting it to AR clearing. And that should be an other current asset account type. And then we talked about down here putting it as other current assets because it shouldn't have a balance once you're done. So we put in our AR clearing. Again, this should be a debit. We do have some videos about what, debits and credits and which account should have which balance, right? So AR is accounts receivable, should be a debit balance. I just keep going down the list. Now, this is in alphabetical order, which is not super helpful. So maybe what you'd want to do is come in here and open up another tab and look at your balance sheet, right? Or you'd have your balance sheet that you're entering from on your other screen. But for now, because I want you guys to be able to follow along to test this, let's just go in and open up our balance sheet so you can see it. Okay. So we have our bank account, checking account, Fourlane. Now, normally I would be putting these in, right? Savings account, exactly as the balance is here. Accounts receivable. Then we have inventory. So inventory would go to inventory clearing. And that would be an other current asset again. And an other current asset type. Okay, and so that's going to go in at 87. All right, and then we have undeposited funds would go in there. Now, we don't usually like posting things directly to undeposited funds. Normally, when we're doing a conversion, we'll tell people, close out your undeposited funds. Get it into your bank account before we do this conversion. But I can post into undeposited funds. You may want to, if you do have several things in undeposited funds, you might want to put it in separately, right? Because if I have a $1,200 deposit today and a $600 deposit tomorrow that's sitting in undeposited funds, I need to be able to break them up separately. Okay. So then we have fixed assets in here. So we're going to have, they have one called original cost, which is a truck fixed asset. Okay, what truck costs $45,000? I don't know. Then we come down to our next section down below, right? We finished all the assets. Now we're coming down into our liability section. So for accounts payable, we should have an AP clearing. Okay, and this would be an other current liability of other type. And then now we're in our credits. Right? Maybe in the asset section, you might have a credit for things like depreciation, amortization, allowance for bad debts. You might have some kind of offset in there, depending on or customer deposits and allowance. They should really be down below, not up in your accounts receivable section. But you might have some credits up in the asset section. It's not common. But now we're down in liabilities, and liabilities hold a credit balance. So AP clearing is going to have how much we owe in accounts payable. Then we might have our opening credit cards, right? Our opening credit card transaction, and credit cards would be treated exactly the same. Oh, they call it MasterCard. Credit cards would be treated exactly the same as bank accounts, where we would be using this trial balance number, and then we would be having to put in the detailed transactions on the other side, right, as uncleared transactions. So they have some other things in here. They have a loan payable. They have a long-term liability for notes payable. They have payroll payable, and we would put all of those amounts in here. Then we get down to the equity section. Now, notice in here that they do have an opening balance equity account. The net of everything after we get all of our clearing accounts cleared out can go to opening balance equity. But I don't like posting anything there unless it's going to be zero, right? I'm going to put it in and an out. I don't want any balances sitting there ever. So in the equity section, you might see things like you might see owner's equity, you might see distributions, contributions, and they have a natural credit balance as well. And I didn't see any of those things in here, so I'm not going to be posting any of those. Then down below here, depending on how you run things, so this I would be putting into opening balance equity, is the difference for everything that we have just totaled up, right? So if I come in here, the net difference between this column and this column is $403,000. I would stick that into opening balance equity with the goal of that being zeroed out, okay? With the goal of that being zeroed out. Now, some people decide not to do it as two. This is balance sheet only. Some people decide that they want to put in the entire trial balance, okay? Now, it flips at this point. If we are putting in mid-year, so like 6/30 is our mid-year point. If we're putting in mid-year sales transactions, income transactions, or like the total, then you are not doing just the month of June. You're having to do the entire first 6 months of the year if you're on a calendar year. So instead of sales of product income being I sell $1,000 a month, it would need to be $6,000 to capture all the 6 months. Okay. So I put in the net income, the sales. I would put in all of the expenses, the cost of goods sold in here. And then hopefully the net difference that we end up with totals out to that opening balance equity. Okay. And then it all zeroes out because it should. Trial balance should balance, right? It should all zero out. Okay. So that is how I just wanted to cover the balance sheet on how we make sure to put in, and I got to some of the P&L, but that's how we get all of these different trial balances put into the system. Okay. So it's just a journal entry, one journal entry for the balance sheet. Now, if you're doing month over month, it's a little bit different. We go into that in a whole different session. But just to remember, when you're doing the balance sheet, it's an as-of balance. When you're doing the P&L, you're covering a period of time when you put the balance in. All right, I'm out of time for this week. I'm so sorry, guys. So I will be here next week. We will finish things up. The last pieces that we have when it comes to opening balance equity or opening balances is putting in the unclear or the non-posting transactions. So we're going to cover that. The non-posting transactions. So that means the estimates, the purchase orders, and what we want to cover in that is what happens if it's partially invoiced, right? So we want to make sure that we cover how to handle that. Coming up for some future trainings, we are going to be talking about estimates as a whole, all things estimates. We have some prepaid expenses, job costing coming up. If you guys have anything in particular that you're wanting to learn, please reach out to me and let me know, because I would love to tackle your particular situation and make sure that we have a training around it. So definitely let me know. That's all I got for you guys today. See you all next week.